Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, December 7th, 4:34 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. Check the trend gauge over here in the upper right. Leadership acting just fine. Green arrow there. Then let's look at the 5 major indexes across 3 time frames. Short term, all 5 trending above the 21-day exponential moving average. Same with our medium term 50-day moving average. And as long as small caps don't completely fall apart tomorrow, they will join the other 4 indexes in closing above the 200-day moving average, and we will go to green arrows across the board there. So what just happened? Well, yesterday was a big disappointment with a gap up that did not hold. Today was a reversal of that disappointment, a gap up that did hold, led by big tech, but also saw broad participation across all market caps and multiple sectors. Here are the final numbers on the day. The big 7, very strong today. Also, there was an AI catalyst, 2 of them actually yesterday, at an AI seminar and then a follow-up interview after hours. AMD CEO Lisa Su talked about the massive increase in the target market for AI chips, and then Google revealed its Gemini upgrade to its Bard AI product and announced that the benchmarks show it all above the GPT-4, which is considered the market leader. So Google and AMD popped today, in particular AMD, up nearly 10%. That was the driving force behind today's numbers. So the big 7 up an average of 2.17%, RG8 up 0.6%, S&P 500 gapped up 0.45, ended up 0.8 on the day. Equal weight RSP also up 0.5. NASDAQ 100 up 1.4, equal weight up 1%. If you recall what these numbers look like over the last week, week and a half, there have been very few days where they were all green. In other words, if you'd see the big 7 up, you'd see other things lag in the S&P, not agree with the RSP or the QQEW, not agree with the NASDAQ 100 or the RG8, be weak or stronger than the others. But some consistency today. Like to see that as the market tries to make higher highs on this bounce off of the lows. Dow up 0.2%, mid caps up 0.55, Russell 2000 small caps up 0.87, Global 6040 up 0.36. Mostly all stocks, bonds, little change on the day from a broad perspective. In-house GROTECTION up 0.48%. Let's hit some charts, and then we'll go into the tail of the tape, and we'll start with the S&P 500 here. You can see the ugly candle outside negative reversal yesterday. That was an expectation breaker as we were looking for a gap above or a strong move above that 45.68 to 45.70 level. And we got it yesterday morning and then selling all day. Today we got it, some selling late morning, but it recovered and then based in the afternoon. So let's go back to this 30-minute chart I've been drawing. And once again, we've got to close above this 45.68 for, let's call it 45.68, 45.70 level. We've gotten one close above it before. That was on December 1st, promptly failed the next day on the 4th. Another breakout attempt on the 5th failed. Another breakout attempt on the 6th failed. So today, when we back tested intraday, this is what I liked about this. We hit that 45.68-ish level several times and bounced off of it. You can see 3 touches on the 30-minute candles here. And then we bounced off of there and went higher. So we're looking for this 45.68 to 45.70 level to pivot from resistance to support. So ideally, any pullbacks to that level tomorrow or into next week, bounce at that level in an attempt to make higher highs, 46.07 being the benchmark we're trying to get above. That was the high back in July on the S&P 500. NASDAQ 100, pretty similar, playing a bit of catch up today. So now at the top of its range, 391, the resistance level here. You can see trying to break above it there and failed, break above it there and failed. Then we went into this weak area where we underperformed on the NASDAQ for 3 days, where we tested the bottom of the range around this 383 level. Tried to rally above 391 yesterday, similar pattern to the S&P, gapped up today and made higher highs, and then basing near this 391 level into the close. So what we want to see here is a break above this high from last week, which will correspond to a sustained break above this 388 top of this base, which is we got there on a very quick move up. Now consolidating that move on both indexes. We're really still in a 12-day consolidation, but optimistic today after being pessimistic yesterday with the gap up fail on Wednesday, but not on Thursday. It stuck. So bulls clearly looking for more of the same. The bears will continue to make up a million excuses as to why it can't happen. Dow stays strong, relative strength leader until today, but holding this 36,000 level. So good stuff there. Then on to mid caps, MDY. Negative reversal yesterday, along with basically everything. Tight range today, holding the 8 EMA. Same thing on small caps. Tighter range, holding the 8 EMA, finishing at the top of the range. So putting in some good work there. And as you can see, not a massive amount above the 200-day moving average, but 2.8%. So we'll take that, and we want to see it hold, and then we want to see this index flatten out. It's close to flatten out, but it's not quite there yet, and then turn higher. Let's go to the VIX. VIX closed at the lows today, but still up mildly, still below the downtrending 21 EMA. Let's go to the dollar. The dollar definitely helped the markets out today with a gap down, rebounded a bit late in the day, but all in all, a little bit of help out after this recent strength the last 2 days corresponded with market weakness. How did that impact the precious metal complex? Well, here's GLD, barely up on the day. GDX, gold and silver stocks, down 1/3% on the day, but holding that 200-day moving average, down 4 days now after this attempted failed breakout from that upper range. And then SLV, silver, down 0.64, 4 days down there as well. Bitcoin, recent breakout, consolidating that for 2 days now, 2-day healthy consolidation on Bitcoin. Let's flip to bonds now. Tight range on the day, closed near unchanged, just down 0.03%. TLT, long bond down inside day also, but down 0.57%, which means rates ticked up a little bit. Here's the 30-year, the TYX. Rates up 0.5% there, and TNX, the 10-year, up 0.2% on the day. Let's flip to the tail of the tape. You can pause this. I'll hit the highlights. Still in a 12-day consolidation, close above that 45.68 to 48.70 level. We need to get another one above that level. Let's see what else. So strength today was in tech, primarily semiconductors. On the downside, oil and some defensive sectors, XLU and V. In-house, a lot fewer trades today than we've had with the goings on the last earlier part of this week. We trimmed GitLab. That was one that we've done 3 buys on, but it reversed our hit a stop on our 3rd buy, so reduced that down. Still like the way it's consolidating after its earnings gap up. We bought coin off a pullback and a bounce off the 8 EMA, and with the close above that 45.68 level, we bought some SSO back to increase our broad S&P 500 exposure, increasing our exposure from a 1.67 to a 1.81. Bottom line on the day, gap up holds led by big tech. Now we'll be looking for the non-farm payroll, the government jobs report in the morning, as we get a lot of talk about a recession coming. We'll see. It doesn't necessarily mean the market has to sell off. It's possible that that 3 legs down that we saw late summer and into early fall reflected what the market was looking ahead to see next year. But as the market does look ahead, but as always, will respect price and volume action. Let's take a look at the portfolio and a couple other key names. Really, the big one, AMD today. We got stuck on this on weakness, multiple closes below the 21. Actually, multiple moves below the 21. Big sell-off after their presentation yesterday. Broke the ADMA. We got stopped on that. That just slapped us today. We'll be looking at buying this back, but we do have FNGU, which has a 10% leveraged position in this, taking advantage of that. Up 5.6% on the day, and it also has 10% in Google, which on its AI presentation had that gap up on almost double average volume today. So we're not playing them directly, but we're participating in the good action. Here's Coin, which we added today off this bounce, first revisit of the 8-day exponential moving average while Bitcoin consolidates. DraftKings are that buy yesterday really not working. Another close below the 21, and we'll jettison that before the end of the week. I'm going in order here from least size to biggest size. IoT consolidating just fine. We're slightly underwater on this after its big volume earnings move. Next up, ESTC. This one's acting the best. We're slightly positive on this one, consolidating with a higher tendency after its earnings gap up. GTLB, ugly open today. Still closed right at the high volume close, just fine. Bounced off of the lows too and closed about just below mid range on the day. So the action's fine there, but if some strength comes in and it goes higher, we can always add back that very small trim. NVIDIA reclaimed yesterday's losses for the most part, but not still below the declining 8 and 21 EMA. To get some confidence in this, we need to see NVIDIA move above the declining 8 and 21 there. Next up is Snow. This continues to consolidate. It's nice up move right near the top of the base. So putting in a handle on this flat base. Pinduoduo, whatever, undercut 140 again, closed above 140, holding the 8 EMA, consolidating nicely. We have small gains in that. CrowdStrike continues to be our biggest position and the best acting also. Gap down on the open, closed at the highs of the day, continues to ride that 8 EMA higher after its nice earnings gap up. Let's look at, we looked at gold, we looked at Bitcoin, ITB, we own Nail. This continues to act better than I could have imagined, and it's got room to run. As you can see that it kind of put in a handle here and now breaking higher. Those are all the sectors that we own, and that's going to wrap it. Well, anything else we're interested in? Let's look at Airbnb. This is one we're watching. Travel stocks have been acting well, and this is forming a double bottom base and has had nice accumulation over the last week. And Workday, WDAY, another earnings gapper that's consolidating, looking good. That's going to wrap it. As always, like to hear from you. Feel free to leave comments on YouTube, like and subscribe. Or if you want to email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. We take a combination active and passive approach at Revere. We're primarily in indexes, not primarily, we're half in indexes and sector ETFs as long as the market is above the 200-day moving average. When the market winds are really at our back, that's when we take advantage of individual names in the leading sectors that act well to build the nest eggs of our clients. And Dan and I have every penny of our family's money in the GROTECTION strategy. We think it's by far the best risk managed opportunity for growth of anything that we've come across. Yes, I'm biased because I run it, but this is pretty much the work of my last 20 years of my life going into this, and I'll be leaving today to have our data analyst intern data scientist intern Luke is in town visiting his buddies Ted and Connor, and we will be going out to dinner and looking to fine tune, as we always do, the mathematical soundness of all our processes here at Revere. So a lot of good stuff coming. And with that, I'll wrap up the video for Thursday, December 7th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.